Is Japan's real estate bubble finally bursting? Recently, many headlines have suggested that Japan's property market is starting to collapse. But is that really true? The answer is not so simple. Prices for used apartments in central Tokyo have recently fallen compared with the same period last year. As a result, many people are worried that the real estate bubble is finally ending. However, this doesn't necessarily mean the entire market is crashing. In many cases, sellers simply became too optimistic. They listed their properties at prices that buyers were no longer willing to pay. The gap between asking prices and actual selling prices became too large. Now, those unrealistic prices are being adjusted. This looks more like a market correction than a full-scale bubble collapse. At the same time, investors should pay attention to several important risks. Construction costs continue to rise. Building materials remain expensive. Labor shortages in Japan's construction industry are making projects more costly and taking longer to complete. Energy prices are also staying high. As a result, renovation costs, maintenance expenses, and even condominium management fees may continue to increase. Another important factor is financing. Japan's Financial Services Agency has expressed concerns about rapidly growing real estate lending. If banks become more cautious, getting investment loans could become more difficult in the future. So, should investors avoid the Japanese market? Not necessarily. A price correction can actually create opportunities. Properties that were previously overpriced may become available at more reasonable prices. The key is to focus on fundamentals. Look for good locations, stable rental demand, healthy cash flow, and long-term investment potential. Don't let dramatic headlines make decisions for you. Instead, understand the data, study the local market, and invest based on facts, not fear. For smart investors, periods like this can offer some of the best opportunities.